global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Ben Jones, Product Development Specialist with Nasdaq Index Research, to discuss a recap of Nasdaq 100 performance in September and the third quarter of 2020, as well as review a number of other Nasdaq indexes. Ben, happy Friday. Welcome back to Trade Talks.
Yes, happy Friday. Thanks for having me on. And it's amazing. I mean, the fourth quarter of 2020 is here. Time has flown by.
It certainly has, and for better or for worse, I'm sure people are happy to see the calendar flip to the next year. But let's talk about September. What was the top and worst performing index, and how did the Nasdaq 100 fare?
Yeah, so when we think about September, we think about the third quarter of 2020. Definitely, started off strong in the third quarter. However, there was some weakness in September. So if we look at really the best performing kind of Nasdaq index in September, you got to go towards healthcare, and it was the Nasdaq U.S. Healthcare Innovators Index, about 5.3%. Last month. Weakness just in the general commodity space, especially in energy. If you look at the Nasdaq Commodity Natural Gas Index, it was down about 18% last month. So weakness there. If you look at the bottom table in that first column, you can see the September returns, and you see across the board. I mean, there was just general weakness across the market. The Nasdaq 100 was down 5.7% last month. But like what we talked about last week is that we did see some resiliency from some of the smaller size companies within that index, as the Nasdaq 100 equal weighted index was only down 2.8. General weakness across the technology sector last month. You can see the Nasdaq 100 technology index was down about 3.8% in September. But I think the key here is that if you take a step back and you look at the quarter as a whole, positive returns really across the board. If you think about, for the Q3, Nasdaq 100 was up in double digits, right? 12.4% last quarter. You can see how those large cap names really led the charge in the first 2 months, as the equal weighted up was only, up 8.2. So we still see performance differential between the Nasdaq 100 and the equal weight. The composite did quite well, up 11%. You also saw some strength in the momentum space, right? Where you really saw those leaders continue to perform well. I mean, again, those areas with positive momentum, as the Dorsey Wright Technical Leaders Index was up 13.5%, was actually the best performing index out of that group in this slide.
If you look at all the major Nasdaq global indexes, it looks like the U.S. outperformed, and small caps are still lagging on a relative basis.
Yeah, really good point there. I mean, we did see some strength from global equities in the quarter, but they continue to lag U.S. equities. For the month, they held up a little bit better than some of their counterparts in the U.S. Especially when compared to those areas that are heavily tilted towards growth and technology. You see how developed markets was only down about 3.3%. Emerging markets better on a relative basis, only down 2.3%. But you can see just for the quarter, U.S. large cap remains the leader, right? So if you look at the past 3 months, the Nasdaq U.S. large cap was up 9.4%, really besting all of their other colleagues or peers or competitors in the international space. From a global standpoint, I think the good news is that we are seeing participation abroad. The Nasdaq Global Index up 7.4% last quarter. Developed markets and emerging markets were both in positive territory. So that's a good sign for breadth across global equities, especially as we head into really the last 3 months of the year. Hopefully we continue to see these areas finish strong. But again, U.S. equities remain the leader. Just look at the way it's performed on the last 6 months, and you're talking in some cases nearly 9% differential since, let's say, the end of March. So overall, positive quarter for global equities, but we continue to see U.S. equities, lead the charge going forward.
And finally, your last slide looks at excess returns in the Nasdaq 100 and S&P 500. What are you looking for in that kind of indicator, and what does the data show here?
Yeah, really we want to see when we're comparing kind of two index products, two areas that really represent U.S. equities, but in different ways. As we talked about the Nasdaq-100, it's about innovation, it's about growth, it's the benchmark for the 21st century industrials. The S&P 500, right? 500, large companies. Typically a benchmark used by a lot of advisors to, when they peg their portfolios against something, it's often, the S&P 500, which some view as the market. But what you can see, though, is that the Nasdaq-100 has been outperforming the S&P 500 over multiple time periods. And this isn't just something that's new. This isn't something that has transpired the last few months or something that's been transpiring just in the year 2020. It's going on for quite a while. So when we look at these two charts, it's looking at a rolling time frame, comparing the returns of, let's say, the Nasdaq-100 versus the S&P 500, and just looking at that excess return, going back in time, looking at a 1-year basis and a 3-year basis. When you look at the chart on the left-hand side that shows you the 1-year rolling return, you can see for the most part, what I'm looking for is that, is it above that, dotted check line, right? Is it above 0? Are we seeing the Nasdaq-100 outperforming the S&P 500 in the points of time? And what you can see is that, for the most part, it has outperformed the market pretty consistently, right? There've been, 3 periods in the last, let's say, 6-7 years where it's dipped below 0 and it's underperformed the S&P 500 on a 1-year rolling basis. But what's really interesting looking at the returns today is just how high and large and the magnitude of the excess returns are today. That's that spike, right? So if we look at the Nasdaq-100, let's say at the end of September, and its excess returns looking at a 1-year cumulative basis, it is outperforming the market by a considerable margin. What I think is really interesting is that, a lot of investors, really look at that 12-month time period, but if you extend it and go out, 2 more years to looking at 3-year, cumulative excess returns on a rolling basis, you can see really, not since 2009 have we seen the S&P 500 really provide kind of any competitive, positive excess returns over the Nasdaq-100 using this example. And you can see how just wide the Nasdaq-100 has outperformed the S&P 500 using a much longer term, formula there, looking at 3 years. And again, it's just been something that has been steadily rising too. I think what's interesting is if you look really since 2013, we've seen higher excess returns in favor of the Nasdaq-100 over the S&P 500. It's just been gradually moving higher. And again, just given the performance differential this year, you can just see how wide that performance differential is between those two indexes.
All right, Ben, appreciate the insight. Have a great weekend, and thanks for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.